Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for January the 27th to 31st, 2020. And so I'm going to call this video Prepare for the Volatility, because this trading week, which is of course the final trading week of the month, is probably going to be a volatile one. There is certainly a lot of domestic news coming out, as well as earnings, and of course the international or geopolitical risk, including the coronavirus, which is sweeping around the globe, which is setting up for a very, very uncertain and potentially market moving week. So let's tackle one thing at a time. Let's first talk about the domestic calendar. This coming week is going to be a busy econ calendar. New home sales on Monday. Then we got the FOMC meeting, which begins on Tuesday. Consumer confidence, people are going to be looking at that to see how the U.S. consumer is doing on Wednesday, right after the open. Then on Wednesday, we have the FOMC, the meeting announcement, as well as the press conference at 2 and 2:30 respectively. Then GDP on Thursday, so market moving potentially there with the U.S. job claims number right there as well. And then we have the earnings calendar. So earnings are really kicking off this week. On Monday, a number of names like Juniper and F5, so some potentially high beta stocks moving there. Then on Tuesday, everyone's going to be watching Apple, AMD, Starbucks, and as well as Pfizer. Wednesday, we got Tesla, Facebook, and Microsoft, as well as Boeing. So people want to see what happens with that Boeing story and how that's impacted their revenues in terms of the downed MAX 737 jets. Thursday, we got Amazon, Visa, as well as Coca-Cola, and so something to watch there. Amgen was formerly a very hot stock, now it took a bit of a hit. And on Friday, we have another industrial names like Cat, Honeywell. Then we got some names like Exxon and Chevron. So let's see how the oil prices have been affecting those companies. So put all that together, as well as the continuing worries and concerns around that coronavirus story. Right now, the story is just getting started. A lot of things being in play right now. Not to mention that the potential geopolitical risk that's still out there. So, with that being said, let's flip to the charts now. Let's go through the week that was, and that will definitely inform us for the coming trading week, because this week was a very interesting week. We had a shortened holiday week, and if you recall what I talked about in last week's video, I kind of said the same phrase probably a dozen times, and that was the condition of momentum and up, right? Momo and up. And as I explained in last week's video, that when you have Momo and up, and what was unique about last week was that we had Momo and up across every time frame that we were examining, right? On the monthly, on the weekly, on the daily, and on the 4-hour chart, we get these momentum and up conditions, Momo up for short. And as I explained last week, it makes for fun trading because, of course, the momentum is rocketing in one direction, but the risk is that you're leaving behind very, very poor market structure, meaning people are chasing, there's FOMO involved, and usually when you have that type of price action, you're involving people who are weak longs, and so any kind of pullback will typically stop folks out because they have poor trade location. And that's what we began to see this past week as the markets had a shortened trading week, but the gyrations that were there in those 4 trading days was enough to take out any of those short-term traders who got involved in the past week or 2 weeks. So let's take a look at some of the charts now and you'll see what I mean. So VIX still looking quite innocent here on the monthly chart, but that underlies some of the volatility that was in play this past trading week. So right now for the VIX, for the highest time frame we're going to look at for now anyways, it's a month, red month, and still has taken out one side of the range. On the weekly chart here, we begin to see a bigger story. As you recall, we went outside bar, down, down. That was momentum and down. This week, we got an outside bar, so we had a lower low, but then the bars bought it right back, taking out the prior bar's high. So breaking last week's high, we had been waiting for that, right, and watching that. That's why I drew that purple line as well as that green line there, which signified an unfilled gap. We'll get to that story now. So now here's what we're seeing here on the daily picture, and we'll zoom into the lower time frame price action as we go through some of the other indices. But here's the story. It was basically a story of gap fills this week, and this will become very, very apparent on VIX as well as on the SPY. But here you go. So going into last week, right? This is what we saw. We had an outside bar last Friday, not this past Friday. Well, look at that. This Friday we also had an outside bar, but quite the difference in size, relatively speaking, right? So here's last Friday's outside bar, right? Nice small outside bar compared to this big outside bar, right? So outside bar, and the question was, what's the next bar? That's always the question for that. For matter of fact, it's always the question is what's the next bar? Because we saw right there that we had an unfilled gap right there. And the question was, when are we going to fill that gap? And that happened on Thursday. So here on Tuesday, so this is Friday, Monday was off. So then on Tuesday, we open in the range and it goes down to take out one side of the range. So it looked bearish for the VIX because we broke below the prior bar's low. But the danger and why you always want to see what they think about the next bar is if the next bar reverses, meaning it takes out this bar's high, immediately the next pivot is going to be that outside bar pivot there, and that's what happened. So they took out this, they killed the momentum, or to put a more I guess softer word like to use is they extinguished that momentum to the downside and they immediately bought it back, right? So they bought it back, then they went after the pivots. So this day here, Thursday, went up, filled that gap there. On Friday, did another outside bar, and then took out all the people who came in here and who got short in this sequence, right? So this came all the way up here and took out everyone. Okay, so we still have an unfilled gap right there at 1480, so we're going to leave that there for now. We'll delete this other great gap that has now been filled. So that daily chart tells us a lot, but look at the nice price action, how we see it on the 4-hour chart. So I'll just zoom in again. This is the story of the week. It was basically a gap fill. It was gap and reverse, basically every single session, Wednesday, Thursday, and Friday. So gap and reverse, gap and reverse, gap and reverse. Look, okay, so here, right there, so here it opens up, it gaps up here, right? It gapped up, right? So it gaps up here, and it comes back down, right? At some point, came back down. Here, it gaps down here, so opens down there, and comes back up again. Here, it gaps up there, comes back down, and it gaps down here and comes back up. So every single day we had a gap and reverse type scenario. Okay, so gapped up there, came back down at some point, and took out that gap that was between here and that open. So we had a gap and reverse every single day. Now to make that very clear on the 4-hour chart, here's how you can begin to visualize that. So here, so this is your prior Friday. It was an outside inside, right? So we're watching, saying, okay, what's the next bar going to be? The next bar was up here, right? So it opens up here, small gap, and they push it up, right? So not before the gap fill at first. The gap fills, they push it up, and then it goes reversal. Okay, so it goes outside and up, takes out this the next day, it gaps down, but instead of taking out that pivot, it comes up and fills that gap, right? So it's a gap reversal back to the upside. Right, and this here, look, it takes out these guys the prior day. So anyone who got short in this sequence gets stopped out here. Now they gap it up again, right, and it's a gap fade once again. So it gaps down, fades that gap. Okay, then they gap it down here, and it comes back up. As soon as it comes back through here, there's always a chance it comes out the other side. This is what happened back here, right? So anytime you come back into the range again on a gap fill, there's always a chance it comes out the other side and creates what this is, an outside bar. That's what you're always watching for when you're looking at these gaps is, can it come back out through the range and create an outside bar or a bar that, that if they run out of time, it's a bar that takes place, an outside bar that takes place across one or more bars. Okay, so that's what happened here. So gap down here, this bar, they couldn't do it in one single bar. It took 2 bars, but this day is essentially took out, well, it didn't quite take out this bar's low, so you can't call that an outside bar, right? Because it's not outside of the prior range, but definitely did enough to take out that pivot, right? So same thing here, gaps up, comes back through. This is not quite low enough to take out that, but enough to take out that sequence. So these two here are outside of this bar. Okay, so very interesting price action there. So for now, it's kind of the what you want to be looking for is this situation. So we have an outside bar, an up condition now on the VIX. So that's momentum to the upside. Does that momentum continue, or does it get extinguished on Monday if we open up and comes back in again and potentially back through the range. So that's what you want to be waiting for. Now we're going to move our levels up. So it's outside bar on the weekly chart. If it goes outside bar and up, that's momentum on the weekly, correct? So you have that daily chart right there as well. So if it goes outside bar and up on the daily, that's also momentum on the daily. So that's what you want to be looking for here, is that here, because that's the daily high, that's Friday's high, and the prior week's high. We break above there, that's momentum to the upside, and that will definitely cause more buyers to jump into the VIX product. Now let's look at the SPY now, mirror opposite. Okay, so on the bigger time frame chart, SPY still doing its momentum up thing on the monthly chart. So this small pullback we had this past week, even for some people it seemed momentous. It seemed like something quite large. In relative terms, it was a very, very small blip. Now this blip could turn to a bigger blip with a few more weeks of selling, but right now it's very, very early. This pullback is nothing more right now than a small pullback in the grander scheme of things. Because on the monthly chart, you don't even notice that, right? So it's outside bar, up, up, up. So until you break below the prior bar's low, right, the momentum up condition remains. Only 1 week left trading left. So this, January is probably going to remain. I'm gonna put it out there. I don't think with 1 week left it's going to take out that prior month's low. I don't think it's going to take out December's low. Okay, so I'm gonna put it out there. I'm going to try to predict price by saying it's not going to take out that low. So we're probably going to end up somewhere in this range here. And then the next month, we're going to move this line below January's low. And if the bears and the sellers have any strength, they need to be able to break below Jan's lows to begin the march for price to come back through the range again. If they can't do it, then expect the price to continue to do what it's doing. That is to go up or perhaps consolidate sideways if it just kind of runs out of steam. Okay, so on the weekly chart, first red week in a couple weeks. We had a red week here, outside week, but that was quickly countered right at the beginning of January. So now we move our levels up. So this week here, it still created fresh highs. So fresh all-time highs on the U.S. It's on the spiders. We saw that. So now you want to be seeing, can we take out this past week's highs or lows? And if the bears can take out this week's lows, then that potentially will extinguish this momentum up condition that we have on the weekly chart. So talking about the week that was on the daily chart, here we go. Just like the VIX, right? So here's the outside bar. We see in the daily that also coincides with the prior bar's low, weekly's low. So if you're a seller or if you're a buyer, you do not want to see this low get violated. If all of a sudden on Monday they come in and it opens up here and they bust it down, that's momentum to the downside. Now, if it opens down here and it comes back up again, right, that's potentially a gap reversal. So let's say it gaps down on Monday on some bad news. Let's say we have more news coming out about the coronavirus and it's bad news and the markets don't like it. Then we gap down. If all of a sudden the buyers step up and they defend this level, and it comes back up in the range again, potentially come back up through those all-time highs. So that's the other scenario that could play out there. But again, the SPY, just to revisit this price action, is pretty much the mirror opposite of the VIX, right? So here's your Tuesday price action. It goes outside bar on Tuesday, just enough to take out Friday's range. Goes outside bar up, so small gap up here, right? Small gap up, comes back and it does create a scenario where it goes down enough where it takes out the prior bar's low. Okay, so these two are outside this bar's range. Then on Friday, it gaps up, looked like a decent gap, but could not hold it. And as soon as it comes back on the range here again, there's your possibility of an outside day, and that's what you got in one single day. Okay, so basically, that's what we want to be looking for. Just like the opposite, this is basically the mirror image of the VIX chart. It's outside bar and down now. Momentum to the downside in the 4-hour chart. You got your outside bar in the daily chart. Now you're looking for what is the next bar. If somehow, as I said before, we outlined two scenarios already. One, the sellers come in and they just push it down and breaks below this bar's low and breaks below the prior week's low, then you have a potential for a bigger correction because now you've extinguished momentum on that weekly chart and you got momentum on the daily chart. You gap down, comes back up, then watch out because then the sellers, they failed to hold it down, the buyers can press them back up. And if somehow they can push it back up here again and break above this bar's high on Monday, that's your momentum up condition. I think that's the least likely. I only say least likely because the price is all the way down here, right? We closed down here on Friday. If somehow on Monday, you'd have to come back through the entire range here and take out the other side. But if it does happen, then that's a very, very bullish move, and that's something you definitely want to be aware of. Okay. So let's move on to the Qs now. Qs. So on the wire time frame chart, as we always do, outside bar up, up, so momentum and up on the monthly chart. Still, the momentum up condition exists on the weekly chart, but the bears here, look, they left a shooting star, and if the bulls do not counter that, right, with a hammer or some sort of price action that allows price to come back up again, we can potentially be coming back through the range. Okay, we have a number of unfilled gaps there for the Qs to go after. Now, I'm just going to double check something here. Okay, so here, yeah, exactly the same price action as we had off the SPY. So outside bar on the SPY, and you have that outside bar and down on the 4-hour chart. So exact same kind of playbook you want to be watching out for here, because I forgot to mention this is on the SPY, we did have that gap fill, right? So on Friday, this gap that we drew, a while back now, about a week or so ago, it did get filled. So we can now delete that gap because that's been filled. Now the next gap down here is way down at 324.45. So same thing with the Qs. There's an unfilled gap right there, did not get filled yet, 220.18, which sits in between the 8 period and the 20, right? So if we get that outside bar condition, then outside bar and down condition, you can expect this gap to potentially get filled because you got that similar gap filled on the SPY. Okay, so watch us to see how that outside bar resolves on Monday. Now Russell. Okay, so Russell here, a little bit different than the SPY and Qs chart. Let's do this first. Let's go to the Dow first because the Dow looks a lot like the SPYs and Qs, so we'll get those out of the way. So here, outside bar and up on the monthly chart for the Dow. The weekly chart, even with all those machinations and everything that we saw in terms of the selling pressure on Friday, the Dow and the Russell for that matter both stayed inside week. So all that's all the turmoil and the uncertainty left us with a big inside bar, so sitting inside the prior week's range. So now we'll move our ranges, and we really want to be seeing here how this inside bar breaks. So that will be significant, right? So that will tell us, it gives a very, very clear indicator of which side is currently in control. If the buyers can push it back above this prior week's high and keep it above this high, then they're clearly in control. And vice versa, if the bears, the sellers, come in and they break it below this week's low, they will have extinguished that momentum up condition, and they have the potential, if they stay below that level, to come back through the range, ultimately testing some of these levels down here, like this outside bar right there that we have in place. All right. So that's all on the Dow chart. The Dow chart looks very, very similar to the SPYs and the Qs, but take a look at this situation here. So on the Dow, so here's your Tuesday, you had a gap down, which then again gap down on Tuesday, then a gap filled. Okay, went inside day on Wednesday, then a gap down and the gap filled on Friday. Excuse me. See this level here? That's your weekly open. So it gapped up into the weekly open. Price tried to trade above and stay above the weekly open to keep that week green. It could not do it. It fell back through the range again. And then once it came in that range, that's your gap reversal, right? That's your red dog reversal. There comes out the other side of the range, and that's what gives you the outside bar. Now, this purple line, before I move this, I'm just going to draw this purple line. I'll put it back on the chart for a second. I'll draw it back in a moment. But I was watching this purple line very carefully because it looked like we were going to break below the prior week's low, right? So here, the prior week's low was 288.14. On Friday, we got as low as 288.34. So we were within 20 cents of taking out this prior week's low. It's very, very close. And so I was watching that very carefully to see if we could break this prior week's low, the prior week's low. And the sellers really looked like they were going to do it on Friday until, guess what happened? Who came to save the day? Boeing. So Boeing came in and saved the day. So here it is. Here's the reversal that happened on the hourly chart, right here. Okay, so coming into this is your 130. So here's 1230. At 130, price started to really blast down because it went inside bar here on 1230, and it went inside bar and down. Okay, so here's the situation. Went outside bar up. Okay, so there's your open. Okay, it gaps up. It comes back in the range, and now it's ripping through the range, the prior day's range. That's going to create your outside bar, right? So this here is going to create your outside bar by coming back through the range. That's what happened. Here, you're basing now below or right at the prior day's lows. So right there, you already broke below the prior day's lows, right? So this low here is lower than Thursday's lows. Now you consolidate for an hour right at those lows. What happens? It goes inside bar and down, and there's your prior week's low. It really looked like it was going to break below there, but what happened? Boeing came out with the news saying that that maybe their Boeing 737 Max fleet won't be grounded as long as they think it may be, and they may be able to begin to rule them out again, perhaps in the May timeframe or whatever that timeframe was, and that definitely caused a positive reaction in Boeing stock. So it went inside bar and down, right, and it looked like it was going to take out that low. Then it went inside bar reversal back to the upside. So this once it reversed. Inside bar down. As soon as it comes up back through here, price starts to come back up again because that's an inside bar reversal. Anyone who gets short here, they made a bunch of money here. They thought they're going to make even more, but then price reversed on them, and now you have to worry about not getting stopped out as it comes back up again. And basically the sellers, they lost all that momentum. So here's what it looks like on the Boeing chart. So remember that pattern, the inside bar. Okay, so here, right there. See that sequence? So it looked like Boeing was going to come back down, and look at the volume that came in here to save the Dow. So Boeing being one of the larger components, weighted components on the Dow, definitely saved the Dow here, the DIA and the Dow index. And if you take a look here, so that is your reversal on the hourly chart. Look at the 10-minute chart right there. So I'm going to move this out of the way here for a second. Just move this instrument, these tools out of the way. So there. Right at 230. So inside bar and down, right? So this is the lows of the day. It's going right into the lows. So it goes inside bar and down. Here's the issue with this trade. If you're shorting here, you're selling this inside bar and down, this has to work, right? Because you're going into lows. You're going right into lows for the day. Yes, there's more range up here, but you're trading into the lows. So that means you're not going after anyone who's a recent pivot. So this has to work. Look what happens here, right at 230. A fresh hour appears right here. It's a brand new hour. Immediately the buyers take control. Look, the bottom, it opens at 31280. That's literally the open and the low of that candle. So basically the buyers are in control for that entire bar. Yes, the sellers came in a bit at the top end here, but from the moment it opened, the buyers were in control, and they popped over the prior bar's high, causing the inside bar of reversal on the 10-minute chart. And that happens right in the fresh hour, because again, right, if you're looking at only an hourly chart and you're not trading a 10-minute bar, this bar looks like this, right? So you don't see this stuff yet. You only see this big green thing, right? It's green from the get-go, so you're only looking at a green bar, right? So that's what's causing people to begin to cover if you're short, because once you break above this pivot high here, 314.49, you got to cover on the hourly chart. On the 10-minute chart, you would have covered already 314.49. That's all the way here. 314.49 is right there in this sequence. Here, high there, yeah, right there. That bar's high. All right, so once this comes back through here, you trigger the hourly guys to have to cover, and that creates this massive short covering and buying that happens. That again saves the Dow from going inside bar, or saves the Dow from going potentially breaking below the prior week's low. So very, very interesting price action here, and again, very sometimes coincidental how things happen, because otherwise, the Dow had a really, really good chance there of turning in not only a red week, but a week that broke below the prior week's low, but did not do that. And now we're looking at an inside bar to start the last trading week of the month, and we want to see now how that inside week breaks. Okay, but on the Dow, same price action as the rest of the indices. Outside bar on the daily, outside and down on the 4-hour. What's the next bar? Now, Russell. We don't have to go into as deep of analysis now. We've got that out of the way. So Russell, a little bit different than the other indices, but essentially now you're kind of sticking on the top end of this broad information we drew a while back, and it's having a hard time going any higher, but it's sitting right on that broad information now, that trend line. So what you don't want to see in February, if the sellers can break below Jan's lows, right, because that's kind of turning into a shooting star, that shows you that supply came in here and there weren't enough buyers to keep it going. So that's what you want to be waiting for and seeing. And then, you know, the Russell, it also turned in an inside week. So there's a kind of a bigger inside week, but it's an inside week nonetheless. You got the inside week now, not again enough selling to take out the prior week's low. You want to see how this inside week breaks, and that's significant because look, there's your outside day on Friday. If it goes outside bar and down, that will break that inside week condition, and you want to see, can price stay below that purple line, that prior week's low. If price stays below that level, that means the sellers are still in control. The buyers have not been able to reclaim that level. So that level will be significant for the entire week and further going forward. Okay, and same thing in the 4 hour, outside bar and down. All right, so let's see how they break those ranges. Or who knows, it may stay inside that range, but I don't think it will, because as I said in the beginning of the video, this video is called "Prepare for Volatility" for a reason. There's a lot of stuff out there that's potentially market moving, and I think it's very doubtful that we stay inside week this next week with all the stuff going on, from the FOMC to earnings and you know, to the buyer scare. Let's talk about the TSX now, because this thing here was choppy, but it did make some relatively decent moves. So right now on the monthly chart, nice big green month, still up 3%, so nothing to sneeze at right now. Still big green month, no selling pressure yet. But it did leave a shooting star finally. So this thing here had been on a roll, and now it looks like some selling came in, because we had you know, the price was up here at one point, but now prices come off. So let's see, as we move our lows up here, if price can break below that prior week's low. Because on the daily chart for the TSX, we have that outside bar. So all the North American indices closed the Friday with a bit of uncertainty, and now we want to be seeing what happens with this outside bar. All right, what's the next bar? Because that will trigger potentially a lot of things if it goes outside bar and down. But for the TSX, it is very tight stuff on the 4 hour chart. You can see this. Okay, so here is your, we did have the full trading week on the Canadian side, but it was, you know, again, tight trading. It was here, boom, Monday, Tuesday, Wednesday, Thursday, Friday. And you kind of get a feel what, you know, once you see enough price action, that when this begins to happen, you see a situation where here's your Monday, Tuesday, Wednesday, Thursday, Friday. Once you get a lower low here, right, you get a lower low, and all of a sudden, the next day, you get a higher high. So you can begin to quickly draw in your potential roadmap, and you know that it's going to take out one side of that range, and it's going to create a series of lower highs, or excuse me, a series of lower lows and potentially higher highs, confusing most people, because that's creating a broad information, right? So here, you think it's going to go to highs because you have a higher high. This high is higher than that high. But the risk is that if it comes back to the range again, it's going to create a lower low, which happened on Friday. Let's see how that level tags it, right? And so that's what happens most of the time. This is why traditional technical analysis is not great, because it doesn't account for the fact that price isn't linear. It doesn't trade in a linear way, and support and resistance is not linear. So yes, you could draw something like this. So where's my tool here? You could draw some resistance, like you could say, okay, well, here's my general area of resistance is somewhere in there. That's true, right? And you could say, you're trading in, you have this sort of situation there. That's true, you're trading in a range, but I think the better distinction is understanding that there's actually people getting stopped out on either side of these ranges. I think that is a more effective way of understanding markets than simply drawing these horizontal lines of resistance and support, because this is showing you that people are getting stopped out, and that there's price discovery going on, versus it just trading in a range. Here you actually understand that there's pain happening on both sides of that, versus, like I said before, when you just draw in something like that, you're not understanding the picture, the full picture, and that people are actually getting stopped out down here. Right? Both sides are getting stopped out oftentimes as they try to play the short side, and comes back up to the range again and stops them on the top side. Okay. All right, so now let's talk about emerging markets, because it obviously took a hit this week with the virus scare. So we are still in that momentum up condition on the monthly chart. Outside bar and up. But now we've come back in now. It's no longer that nice big green outside bar up condition anymore. You have a red month. Only have 1 week left. Let's see how this month ends. But right now you're down 0.6%. Okay, so it's funny enough. It wasn't all the tariff news that that was going to create the uncertainty in the markets. It's this virus scare. So now markets gap down on Monday, this past Monday, or Tuesday because it's a shortened week and EM did not trade on Monday. And so we had that gap down. We were watching to see, okay, well, how do you break below the prior week's low? Well, how you do is by gapping down. That will do it. And then took out the other side. Exactly what happened, right? So once you take out this low, the next pivot is the pivot to go after, and they did that. Now, on the EM chart, we got that reversal on the weekly now. So on the daily, it looked like this. So essentially, here's your gap down on Monday, Tuesday, because Monday was off. Pulls back into the range again. Look, that purple line is the prior week's low. So on Tuesday, it gaps up slightly, could not tap the prior week's high. It's kind of a retest. Then on Thursday, it gaps down. The buyers step up, and on Friday, we gap up, but then they sell off most of the day. Okay, so there's your price action. Once it breaks below the prior week's low, the bias is to the downside. Wednesday pullback, and then continuation on Thursday, Friday. Okay, so now we want to just wait and see now how much range can this thing continue to go down, because you have a reversal, but you still have a bit of month left, 1 week left, so the momentum up condition has not been extinguished yet. TLT has definitely been the beneficiary of this current market environment. Been on a roll now. Now finally, the momentum condition on the weekly chart's playing out. Let's just first talk about the monthly chart here. Here on the monthly chart, inside bar and down, inside bar reversal in December. It stayed in the range though, but now finally in January, you're breaking through the range. So you did not break below the prior month's lows. So TLT was still in a bullish holding pattern, and now you've broken above December's highs, and now you're coming up back to the range, potentially going back up through here, right? Going back up through there. So in the weekly, it's been slow to play out, right? It's been very, very choppy because you're kind of trading in this tight sequence. So here, but it's momentum up though. Here you can see right here, outside bar up, up, up. We have not had any lower lows. So price is showing you that right away. We finally, we're breaking through some of these ranges. So now we're going to move up our levels. Let's just watch and see, can the momentum continue? Because that's a momentum up condition. You want to wait and see now. If TLT breaks below this prior week's low, that once will be extinguished. So watch for that. And on the, what can you say about the week, right? It's gap up on Monday, gap up, gap up, gap up. So 4 trading days, gaps up every single day. And unlike the indices, it did not gap and reverse. So people are definitely chasing yield once again. They're back into the yield trade. So maybe folks are wary of the potential returns of equities. Another beneficiary to this environment is, of course, a shiny metal known as gold. So let's pull up the gold micro futures. I talked about it last week. A decent trading vehicle. All right. If you don't want to trade a CFD like XAUUSD, and you don't have a large enough account to be swing trading or intraday trading the gold futures product, the GC product, then the micro gold futures product may be something you might want to look at. So right now, micro gold futures looking decent, right? So here's the bigger picture. It's momentum and up on the quarterly chart, right? So last quarter was inside quarter, nothing happened relatively. And now it's broken above the prior quarter's high. So outside bar, up, up, up. That quarterly momentum has picked up, right? It's been going since October, since October of 2018. That actually, excuse me, we did break below that. So I'm mistaken there. We did break below that for a brief period in Q2 of 2019. But since then, Q2, Q3, Q4, Q1, boom, outside bar, up, up, up. Back to the month. Green month so far, up 3.2%. And on the week, we got that reversal. So here was the question that we talked about last week, is that we had the big shooting star 2 weeks ago. It looked like we were going to get a reversal, right? It's like, okay, if you leave a big shooting star like that, if you break below that low, you can potentially come back through the range again. But the buyers bought it back right away, right? And they created the hammer, right? So this is how you fight a shooting star: is you create a counter point to that shooting star by showing that there's actually demand, right? So that's showing supply, and this is showing demand. Now it goes above this prior week's high, the prior week's high, and so that creates a reversal, because you went down and then you went back up. So there's a reversal. Now we're going to draw our levels in there like that. And so, very nice sequence. We did have the short and trading week, but basically this is what all you need to see here is that purple line is the prior week's high. That prior week's high got broken on Monday. So you got a big outside bar on Monday, and then it will actually turn to a doji. So then this is not Monday, this is Tuesday. Apologies. Tuesday. Wednesday, very tight range. Outside, inside, right? One of our favorite patterns, right? Outside, inside, break on Thursday. So outside, inside, break, and reconfirms the weekly reversal signal, right? So you definitely want to be taking that, because this already broke the prior week's high. This is consolidation. It breaks above there. You're going after that pivot, and now potentially going back up to the range. So you want to be long gold at this point. Long gold. Let's talk about BTC, digital gold. Okay, let's bring up the Bitfinex chart. So BTC taking a bit of a breather this week, unlike the gold chart. Let's talk about it real quick. So right now, a month is still green. Has pulled back a bit, but having a decent month so far of January, up about 16.5%. So not bad for the digital currency. But the week itself, quiet, right? So inside week. So we had a really good run here on some of these other coins. We had some really, really big runs. But prior to that, in January, we had a good 11% week here, the first week of Jan, then a 0.4% week, and now this week here we've pulled back a bit. And even with all that selling in the crypto market, people are, I think, maybe over exaggerating the pullback. We're only down 3.5%. And something that's basically gone up 17%, and you're down 3.5% in the week, and it's still inside week, right? So this is certainly nothing to be really, really concerned about at this moment. Now, however, if you do break below this week's low, let's move this and move our ranges now. That's an inside bar, and that's significant. So you want to be seeing how price transacts, and if it can take out which side of the range this price breaks. We want to be aware of that, because that will be significant. Now you want to be using the higher time frames to be also guiding your trades. So right there, the monthly and the quarterly open are right there. Okay, so the higher time frame guys, they're still seeing a bullish charts, right? So here's your monthly chart. That looks quite bullish, right? Because you're coming back through the range. Look, the quarterly chart, guys, that's looking quite bullish still, or maybe just neutral, because it's an inside quarter. Okay, and that may remain inside quarter for 3 months until the Q1 ends, and then you have a better chance at taking out either side of the range, right? Because right now you're kind of right in right in the middle, so kind of hard to take out that pivot or that pivot, because you're kind of far, unless something substantial happens. Because if you recall back in 2019, the beginning of 2019, the reason why we had such a big move up is because look how small that consolidation was. At the beginning of Q1 in January of 2019, very small inside bar, and that allowed the next bar to easily take out one side of the range. Here, still you got to go all the way up here to 10,480 to take out the prior bar's high, or you need to break below 64.77, right, to break below the prior bar's low. So that's the ranges you need to work with to get through there. Right now you're trading at 8,400, right? So you're just kind of far from taking out either side of that range. So that's what you want to wait for Bitcoin right now. For the Bitcoin, here's the daily chart. It went outside bar, inside bar. Going into this past week, I actually took a long here. I'm still long, I'm still long a bunch of cryptos, just not Bitcoin. I tried to get long Bitcoin here. Outside bar, inside bar. Went for the upside move here. Similar to what we saw in gold, right? Outside, inside. That did not work because it went outside bar, up. I was involved here. As soon as it broke below that low there, I got out. Okay, so there's no reason to stay in the trade like that. Knowing what we talk about here in these videos about price, once that low gets taken out, outside bar up, that's momentum. you break below there, you lose the momentum, and it comes out through the other side of the range, right? So bam, if you don't stop yourself out early, you'll get stopped out no matter where you put your stop, because these pivots, they're gonna come after you and get it. So okay, taking that trade, no problem, taking that and taking that small loss before it turned to a big loss. Okay, so let's just watch BTC and where it goes from here, because the 2-day chart, again, it's we definitely want to be seeing how this this next week breaks. But here, let this final 2-day chart inform your decision. You got a 2-day bar setting up right now, and now you want to see which way this inside bar breaks. Inside bar, because if it goes inside bar up, that's potential inside bar reversal back to the upside again. You go inside bar and down, that'll break the inside week's range. You have potential more downside, maybe back to the monthly, quarterly open down here. Okay, so there you are. So let's fast fire now through a number of charts. We haven't done this in a while, but let's take a look at some of the sectors out there, because that's been something we did in the past. But even with this recent small pullback, I think that it's important to have context, and that's kind of what this entire video series is about, is to give you the bigger picture, because sometimes it's very, very easy to get lost in the noise and to lose the forest through the trees. So I'm going to take a step back now, and we'll examine all the 9 sectors of the U.S. stock market. So here now, this is the monthly chart, big picture, right? So here, basic materials. All right, currently red month, and going never hit those all-time highs. So fresh, we're still far from the all-time highs that were put in back in Jan 2018. So basic material showing you, yes, you have an upward trend, but now you're hitting some selling. Now next month you want to see, can you break out either above Jan's highs or below Jan's highs, and that will be something you want to be looking for. You're not going to take any one of these data points in isolation. You want to be putting this together into a bigger narrative, a bigger picture. Energy trading close to the lows of the past range, several year range. So look, you're going back into this area here of October 2011. You're back, down here now. So certainly, oil and the energy sector is not taken off with all the current geopolitical risks and uncertainties. Financials, though, blasting into highs. So this past month, we made some multi-year highs. Has not taken up the highs from 2007, 2008 yet. Did it? High of 3097. Oh, it did. Wow. So that is also all-time high. So I did not know that we actually broke through those highs from prior to the 2007, 2008 crash. But it looks like this past month we were able to do it. Yeah, even in December we did it. So December and Jan we had that continuation. Well, although now pulling back into the range slightly, but far from giving back all those gains. So still into those highs. Industrials. Look at that. Industrials all-time highs. Going inside bar up on the industrials, right? So going into February, you do not want to see price break below that low there. So I'm just going to draw that low now. We're going to revisit again in Feb, and I'm going to change this color to orange to mark that significance of the monthly chart. But you do not want to see in February this low get taken out, because that will be an inside bar reversal back to the downside potentially. If that happens, I'm not saying it will, just if you want to watch for that. XLK, the tech sector, wow, boom. Is that is that in a bull market? Yes, it is, right? And right now it's momentum and up. We talked about that already. So again, just draw that level there. When February comes around, if bears do not take control until they can break below this prior bar's low. Staples, rocketing, right? So staples is a good place to be right now. People are looking for yield, looking for safety, and they're chasing staples into those highs. Here's the sector that's really benefiting. XLU, if you're chasing yield, yeah, you're going after XLU. Look at that. Inside bar reversal right here, right? Inside bar down, they get reversed right here in December, and now they chase yield. Bam, up 5.8%. Not bad for a stodgy sector. Healthcare, okay, so healthcare also hits hit all-time highs there. Pull back now, turning into a bit of a doji, a little bit of uncertainty here. Let's see how this month closes, but you got that momentum up condition, so you put your level right there. You want to watch to see how that ends up in January. And finally, discretionary. How's discretionary doing? Pretty good. Multi-year highs. Yes, the month turned red. A bit of indecision because you have that doji right now. So continue to watch for that. But right now, it is a decent looking picture. Okay. So with that being said, let's do some higher time frame charts, and then we'll rapid fire some stocks to finish things up in this week's video. So here's some higher time frame charts to give you a broader picture once again. EVBG, Everbridge. This is a company here that does software. Decent looking chart right now. Outside, inside, and it breaks to the upside, right? So inside bar and up. If this thing keeps going and stay above that quarter's high, you're going after that pivot high there. All-time highs, 104.22. Let's see how things roll out in earnings here. Earnings are in play. Let's see when's earnings. Earnings not until way here, until Feb. So you got some time before that earnings counter hits. Wix, same pattern. Outside, inside, and up. That's a nice move here. Coming back up, potentially taking out that all-time high. Same picture for Square. Look at Square. This past week, it broke above the prior quarter's high. Outside, inside, it did get a bit of sell, and it really popped up on Friday. Right, we had that big gap up that really triggered it. But back to the weekly, the quarterly chart. There is your pivot that you potentially go after. So if you're only tuning into this recently, then this may not be significant to you. But these patterns, when they work, they really work. So it's worth putting on your watch list. I think last year we had a number of these stocks that worked really, really well. I'm just trying to think of one off the top of my head here. Restoration Hardware was the one thing I was thinking of, and we identified this down here, right? So April 2019, that in Q2, once you break above that pivot high, that's the next pivot. And look, not only did it do that, but it kept on going. So this move here, just to draw it in context, the move from here to there, that's a 100% move, right? So it went from 121 to 200 and what's the high there? 243. So that's 100% move from once that broke through. Not saying that's going to happen with the other stocks, but when that does happen, something you definitely want to be paying attention to, because these are higher time frame charts, signifying a bigger, longer term investment that these investors are looking at. Okay, let's do 2 more. Pfizer, kind of a stodgier name, but creating that outside, inside, and up pattern, and potentially going after that pivot there. And finally, Cyber, another software company, also potentially going back up to those all-time highs. And who knows, right? Trading at it broke here at 127.50. Is it like Restoration Hardware and goes to 260? Who knows, right? So, but that's something you want to watch for. That pivot is definitely one in play. So 148.74, that's the pivot you want to be watching for. So now let's just fast fire some final stocks here. Let's talk about our stars and dogs. Let's talk about the stars. Let's do the dogs first, and then we'll talk about the stars. So the dogs, let's do this first. So out of all the financials, man, Wells Fargo got hit this past several weeks. The earnings did not come out well for Wells Fargo, and it now broke below that earnings gap. So Wells Fargo selling, going into these Q4 lows of 2019. Industrials, basic materials, not doing so hot. Look at Alcoa. Wow, the last couple of weeks not been kind to Alcoa. Here's another name similar. Here the ETF, right? So metals and mining. The XME ETF not tracking well. If you're short, this is tracking very well. If you're long, you're on the pain trade, because this is since January. Look, this is the beginning of the year. Outside bar, inside, outside bar down. This is momentum down. There's no lower low until here, right? The second week of January. It goes outside bar up condition right here, but look, momentum got extinguished right there. Then it goes inside bar and down. And look, here we finally got a higher high, but that's an outside bar. So now you want to wait and see what happens there. But yeah, ugly for XME, and this means names like, you guessed it, like these steel company names are doing really, really badly. So here's ATI going right in the lows. Use some context there. ATI, it's more range back. Yeah, I think it took out that pivot there. Getting very close. Yeah, ATI, Nucor, right? So another steel name. Yeah, this people are getting scared out into perhaps the slowdown the slowdown in the Chinese economy might impact these steel companies. And then you guessed it, yeah, Ladder X, so steel company, US Steel, into multi-month lows. Actually, this is actually more than multi-month. We are talking here now. Yeah, you have to go back to 2016, so multi-year lows on US Steel. Nice short, very nice short. Let's talk about some of the stars now. So let's start with Snap. Man, this one has been on a lot of folks' radar, and man, congrats to the folks who are holding Snap and riding that train, because yeah, you're definitely causing some shorts some pain there, because this thing has been on a roll since the beginning of since mid-December, right? So basically gone from 15 bucks all the way to 20. 1976, a very nice move so far on Snap, riding that kind of this is probably like a 5-minute moving average, 5-period moving average, just kind of you're tracking the upper end of that. Apple, man, it's going to be hard for the US stocks to go down when you have Apple doing that. So Apple going into highs there, although here you're getting a little peaky because you had a gap reversal, you gapped up, came back in, that's a gap reversal. Now you want to see what happens on Monday. Is it do enough to take out that prior bar's low? This is what I did last, if you recall, is what I did last week on the Russell product. Okay, now Adobe, another software name, looking strong, going into all-time highs, right? Adobe into all-time highs. Running out of momentum a bit here now, so it's still trying to do it, but it's running a lot out of steam a bit. Tesla, you know, congrats to Elon and all Tesla shareholders. So this thing is going about, you know, came very close to taking out 600 this week. I think that's the number that everyone's looking at right now, 600. Can you get the $600 roll? It's got very close, right? It got to 594.50, but 600 looks like it's just around the corner. And of course, we talked about utilities already, but look at AEP being one of them. You know, there's a bunch of utility names that look really, really good right now. Started 2 weeks ago, right? So look right there, Jan 15, it gaps up and it's gone. So that means, you know, names like AEP, you know, NEE, they're all going to look good, right? So they all look good right now. So people are chasing yields. That means TLT, the bonds, as well as the utilities are doing well. All right, so slightly long video this week. We covered a lot of ground. So once again, thanks for hanging in there. If you have any questions, feel free to drop them in the comments section on the blog or on YouTube. As always, if you enjoy these videos, please give it a big thumbs up so it'll help us find more folks in our community. And subscribe. That way, as soon as the video drops, you'll get notified through YouTube or through our mailing list that the video has been published. So, should be an interesting week this coming week. So I wish you well, happy trading, and catch up with you next week. All the best.